And now for more on the SOE reforms, we're joined by Ding Yifan, researcher at the Development Research Center of the State Council. Thanks so much for joining us tonight, sir.
Hi.
All right, Mr. Ding, so a lot of changes underway as we saw Shanghai giving more details about these reforms. What, in your opinion, is the most significant change here?
The most significant change this time is that Shanghai is leading a new round of reform and opening measures in China. So since the third plenum of the Chinese Communist Party Central Committee, a wide branch of reform and opening measures are expected. So Shanghai has opened its free trade zone, so leading the opening measures. So people are expecting that Shanghai will take the lead in reforming the Chinese economy, especially in state-controlled sectors, so state-owned enterprises. So this time, they started this state-owned enterprise reform by differentiating their nature in 3 categories. Right. That's a good start.
Yeah, let's talk about those categories. Shanghai certainly taking the big lead over here. And the 3 categories are competitive, functional, and public utility. So what exactly does that mean? Explain that for us, please.
By differentiating those SOEs by their nature, it means that Shanghai will adopt a different mode of measure for the performance of these SOEs. In competitive sectors, you can measure the performance of SOEs by their profitability, while in public utility companies, you cannot measure the performance of the SOEs by their profitability. You have to measure their performance of these SOEs by their public services. If the public service is well provided, it's okay, no matter it's profitable or not. Or for functional SOEs, you have to measure their performance according to the scientific and technological achievements.
Well, you mentioned profitability, and you mentioned profitability, and profitability is a really big thing because one of the major reforms actually hopes to extract more revenues from the SOEs, and they say that the dividend payout should be increased to 30% by 2012, currently up from 10 to 15% now. What is the significance of this? How do you see these funds being utilized?
I think that in the competitive sector, if the SOE could reach their objective of profitability, so they have to return some dividends to state, to the public authority, because at the start, the public authority invested a lot of money to create these SOEs. So in the end, the SOEs should return some profits to investors. It's normal. Even in private sector, a private investor will demand some return from the investment.
Well, you mentioned the private sector, and the government has promised to open up more protected industries like that of finance and energy. So what opportunities will be created here for private companies?
I think, especially in the competitive sector, state-owned enterprises will properly open its capital to private investment. So private companies are invited to invest into state-owned enterprises' capital in order to improve the management, especially, and in order to introduce much more profitability logic into the enterprise's management. Because otherwise, SOEs are tempted to obey only to the authority which are sponsoring those enterprises. They don't take their decisions according to market logic.
All right, yeah, a lot of big changes. One of them is the shift to more market-based pricing. We're going to have to leave it there, though, for now. Thank you so much, Ding Yifan, researcher at the Development Research Center of the State Council. Thanks again.